Well, Manek has referenced Sir John Templeton in his commentary about this year's market, this 2026 year-ahead report to its clients. In fact, let's bring in David Bahnsen, the Bahnsen Group Managing Director. Bull markets are born on pessimism and grow on skepticism, mature on optimism, and die on euphoria. I don't know if Sir John Templeton has said it. We've all kind of felt it. The question is how to figure out when, because it's not necessarily a timing mechanism per se.
It's actually a terrible timing mechanism, but it's still philosophically something investment managers have to hold on to, understand the sort of behavioral cycles of markets.
So this morning, AAII, every Thursday, the retail investor sentiment number came out, 49.5. It was 42.5 a week before that. This is the highest number of the year. A lot of folks on the street look at this as a contrarian indicator. I don't anymore. I think in the last few years, the retail has been a lot spot on. But what do you use then to determine when there's too much exuberance?
Well, you can't determine it scientifically. It's indicators that you have to look at the weight of all evidence. And I still do look at that. And I think that the last few years, the fact that optimism's been high and markets have done well doesn't change the fact. This goes back to Alan Greenspan calling irrational exuberance. The thing went on another 3 years.
Right. That was December 96, I think.
Yeah. August 96 at Jackson Hole, I think it was. And then we know what happened, but it happened several years later. But look, you have a low VIX, a low put-call ratio, high flows from retail into certain sectors, total agnosticism about valuation. Those things all put together are what we look at, but we still can't time our way out of it.
Right.
We try to be all weather.
Just you're aware of it, but you're not taking action based on that.
Except for we generally want to avoid things that are hyper popular that we think the value's already priced in.
So that brings me to some of your themes for 2026. At the top of the list is AI vulnerabilities.
Yeah. This is a big story because you can look at the China competition story, which is never talked about. You can look at the fact that everyone seems to think all these companies are going to win together, and I don't know how in the world people believe that's going to model. So there is winner take all, or all are going to be winners, and they can't both be true. But then I think there's the political and cultural issue that people believe the public's totally on board here. And I don't think that's true. And I think you're going to start seeing more pushback there. I think a couple times ago I was on the show with you talking about zoning issues with data center. There's going to be more of that going on. So we've
seen some towns vote down data centers. There's no doubt about that. And I think there is this notion that the Google umbrella is going to beat the OpenAI umbrella of names, right? So we're starting to get some bifurcation there in terms of a winner and a loser. Let's talk about small cap earnings growth here, because this whole show theme has been this week of small caps. They threatened to take off a few times last year, and they're looking pretty good so far this year. Yeah, they are, and it was really starting in like October-ish, and it was a huge rally. I think last year in the middle of the year, the delta between small and big cap was almost 20%, and it closed the year just a few percent. Right. So you've seen a lot of that, but you still have a long way to go. The issue is, and this is addressed in my paper you're referencing, which, by the way, is at dividendcafe.com, Charles, you're going to have huge earnings growth this year in small cap. The problem is it's tough to buy as a whole index. Sure. It really is one of those rare asset classes that I think active, it makes a lot more sense than passive. I did start to show up those showing the outperformance of the Russell right now is significant against everything. Let's go to some of your picks here. Chevron doesn't surprise me necessarily. I know you've liked a lot of these names. Simon Property Group, I think you've talked about before. Blackstone, let's talk about them for a moment, because you just referenced Main Street anxiety against AI and data centers. There's also some frustration on Main Street with private equity groups. President Trump talking about them buying up all single-family homes, that kind of thing. By the way, Main Street frustration. Let's talk about the biggest Main Street frustration of our lifetime. Goldman Sachs after financial crisis. Everybody wanted to crucify them. They're up 10x since then. Right. Blackstone, people can hate. People are always going to hate Wall Street. It doesn't stop the fact that they just print money. They're fee-based businesses. It grew the dividend 30% last year. The stock was down about 7% on the year, but it had been up 30% each of the prior years. Since we bought it, we're up about 1,200%, and it's a lower valuation now than when I bought it. The dividend right now from where we bought it is 30% per year. Okay, so you have this great compounding of cash. Look, there's definitely data center
exposure, but they're in the leadership names. They're not doing the low quality. They're the where you want to be, and it's diversified: credit, real estate, private equity. And
we're running out of time. We ran out of time, according to the producer, but I won't get in that Mullis. You talked about being specific on small caps. MC is the symbol there. Yeah. Listen, I love your work. So Dividend Cafe, folks, everyone should check it out.
Thank you.
Good
Appreciate
stuff.
it.
Happy New Year.
Happy New Year.